All right, thank you very much, Janet. And in just a moment here, I'll take a look at some opening prices, and then we'll get into a high caliber roundtable discussion here talking about this. All right, things are opening up. Let's take a quick look here at our first trades today on the corn with our live quotes provided by Bar Chart. It's following through. March corn. Remember yesterday where we were? March corn now at 5.30 this morning. We are up 11 3/4 cents, make it 5.29 right now. It actually got as high as 5.41 and a half though in the overnight trade. So seeing a little follow through buying here. But remember, we're off of our overnight high by now about 13 cents. Soybean trade is opening up. Whoa, we had some follow-through buying overnight. It was about 14 cents higher about 8 o'clock Central Time last night. This morning it went pretty flat, and we have March soybeans down 7 1/4 at 14.11. This market will take your head off here. Still above $14, but off our overnight high by 25 cents already. So the May contract down 6 1/4 right now. Maybe reversal type action in the soybeans. We'll talk about it in a moment. In the wheat market in Chicago, it has turned lower after a high overnight of 6.80 3/4 on the March. Now we're at 6.62 3/4. So that would be a 17-cent turnaround off of our overnight high. Actually, it's an 18-cent turnaround. We're down 2.5 cents as it stands right now. New crop July down 5 1/4. That's on Chicago July wheat. Okay, now to Kansas City. March had a high last night of 6.39 1/2. Now we're all the way back down to 6.23 1/4. That would be 16, almost 17-cent turnaround now. And now we're up only one tick, 1/4 cent higher. And July new crop actually down 1/4 cent at 6.27 3/4. Crazy volatility going on here. On the March Minneapolis wheat, we're now 6 1/4 higher at 6.27. We had been as high as 6.36 in that overnight trades. We brought the market down about 9 cents from that overnight high. Well, let's talk about this. And I want to bring in our roster of analysts here. We have Chris Swift live in the studio. He's with Swift Trading Incorporated. We have Todd Bubba Horwitz of BubbaTrading.com. We have John Newton joining us, chief economist with American Farm Bureau Federation in Washington, D.C. My goodness, we've got a lot of firepower here this morning. Todd, let's go to you here first off the bat. I know you were following this yesterday, and I was watching some comments, and you had made the comments online as we headed into the report. You said, I'm holding tight, I'm long, and I'm just going to hope it works out. And boy, it probably did. That took some guts to ride through that. Explain why you did that.
Well, first of all, Marlin, as we've talked about for the last few weeks, or almost maybe 6 or 7 weeks now, the markets have been extremely bullish in setting up that way. And we've seen the action, and the buyers were there, and what was going to happen is more than likely the report was going to be somewhere neutral, which I think it kind of was, but overall you caught too many shorts, which then caused that major spike yesterday, which is almost exactly what we expected. The trend is still higher. We would expect, a little bit of a pullback from here, as we're seeing right now. But overall, we're looking for more buying opportunities. There's a lot more room on the upside across the board in corn, wheat, and beans as far as we're concerned. And I consider these pullbacks as just another opportunity to step in, as we've been buying since the high 3s, and now we're in the low 5s in corn. I think they've got a room to take a chance at $5.50, maybe even $6 before this move is over. So we're looking for continued buying strength, but you're going to see some pullback and some profit taking, which is perfectly normal and natural. We should not get concerned about a pullback, but look for opportunities to buy and step in again.
Chris, I want to bring you into the conversation here. Chris Swift with Swift Trading. When you look at the way the corn and soybeans have acted here in just the last few moments, how aggressive are you being with your clients around the country here when they say, what do we do with this? It's such a big move. Do we jump in and price some of the old crop and maybe new crop? We had another sale of soybeans here this morning, over 400,000 tons, but I'm sure you're getting all kinds of questions from producers about what to do now.
Well, we are. The one thing that we recognize is this is a demand-driven market, unlike a supply-driven market. Whereas were it to rain, were we to see South America come on with a huge crop, then we could see the market go back into a bear market where we would have to liquidate inventory. But right now, we believe it is a demand-driven, and it is primarily due to China and their hog production expansion that they have had. And I don't really see much of an end to it just yet because we don't know how far along that they are. We do know that they have increased significantly in their hog production and will continue to do so. Right now, corn trading in China is a little above $7 a bushel. So with freight, it makes U.S. corn still look a little inexpensive to their hog operations.
John, I know you're coming fresh off of your national convention that's wrapping up here this week. And I just wondered what you've been hearing from producers. All this rally happened right on the tail end of the convention there, and they've been witnessing this rally since August now in the grain markets. Are they taking advantage of this, or what kind of attitude have they had on this?
Well, I think they're certainly taking advantage of it. There's opportunities to buy back at certain points to try to capture some of this rally. But one of the things that I've heard the most from producers, and not just this year, but last year, is just the length of time it's taken us to figure out the actual size of the crop that we're dealing with. We started out in May thinking we had 97 million acres planted. That came down. We thought we were going to end the year with over 3 billion bushels in carry out. Now we're looking at 1.5 billion bushels on the corn side and 140 million bushels on the soybean side. So I think frustration is that producers spent a good part of this year marketing their crop at lower prices in a market that thought it was oversupplied. And then really beginning in August, we've gotten to a much tighter market. And many producers, without buying back into the market, may not have much to sell.
Chris, I want to go back to you here for a second. Look at this spread. I want to bring back our quotes here for a second, provided by bar chart. On the corn, we have March still 12 1/4 higher at 529.5, even though it's off its overnight high by about 12 cents. It's hanging in there, but did you see the soybeans here, Chris? In the last 2 minutes, look at this. March now down 12 at 1406 1/4, got as low as 1403 1/4. Do you think there's a danger that there could be so much selling hitting the market that it could take it back under $14 today?
It's always possible. Anything and everything is possible in this arena, but we know that from yesterday's price action, the information that we've got is pretty solid, that it's going to just create greater volatility. I'm wondering how much of the corn crop or even soybean crop is still farmer owned. I think that when we saw August and September of 20, we saw a tremendous amount of the big corn crop there, and I think you saw the producer sell a lot of corn. So in my opinion, I think the elevator has a great control over the corn and soybean crop this year, and they'll be much less likely to be scared and try to sell it off than what a farmer may do trying to capture a high price.
Todd, I know that's something that you watch very close, and you also keep your finger on the pulse of the production going on in South America. So what about all this commercial buying and also the threats to production in South America? What are you hearing right now?
Well, I think that, we've got, there's issues everywhere, and I think this is what's actually helped propel where we're going. And I think this trend was identified quite a while ago, and there shows no weakness. But you always have to remember, Marlin, in any kind of market, there has to be some sort of pullbacks. We don't go in a parabolic direction. And basically, in the last 2 weeks, in soybeans, for example, we broke 13 and then we broke 14. So even if we came back a little bit below 14, it's not like 14 is not a crisis number here. It would be just, again, we're looking at every pullback to a support level, which probably 1390 is probably the right number right now. That if we come back there, we'd look to step in and buy because, again, there's going to be shortages in places. There's still weather issues, and there's some dollar problems going.
All right. Well, gentlemen, I sure appreciate all your information. Man, it's so good to talk with all of you. I'm sure we could probably talk all day about this, but I appreciate you coming in and talking with us here live from several venues today. We have Chris Swift here in the studio. We have John Newton with American Farm Bureau Federation. Todd Bubba Horwitz chiming in from BubbaTrading.com. We're going to pause for a break right here. We'll have a look at our ag weather, and then we'll come back and I'll give you another update on our market.